Good morning, everyone. It's Rob. Welcome to Market Mornings with Robert Roy. Hope you're having a fantastic day. As we get started in here, keep in mind everything we look at is for educational purposes. Nothing's meant to be advice or recommendations. If you like what you see here today, folks, make sure you go ahead and follow us on the various social platforms out there. Do not miss any of the content that we put in and day out there. All right, this update is for Wednesday, November 16, 2022. Here are our picks for today. So I want to start off first with looking at futures and see where that is today. Futures, everything except for gold is bearish or red today. We've got the ES is down 3, the Dow is down 11, the Nasdaq's down 21, the RUT's down 2. Now Bitcoin is down 250, it puts it at 16.5. Ethereum is down 36, it puts it right at 1200. Gold is up 8. And then crude is holding steady about 86 3/4 right now, down 13 cents. All right, so if we go back and take a look at our list of what we've got out there, AAP, excuse me, which is the very first one, Advanced Auto Parts. Now, there is no weekly earnings, or not earnings, options on AAP. But they do have earnings expiring this Friday, so 2 days from now, basically Wednesday, Thursday, Friday. So we're looking at AAP. They got earnings came out on them, and they are down $26, which is why I kept them on my list. All right, they're down at $157 right now. So we're taking the train down through 178, down through 167. We're all the way down here at 155. So we've got a fibit of 12, so 55. So we don't need a fibit in there. So we're going to look at a bear call spread above 168. Now there are $5 increments here, so you're going to wind up at the 170s. I can't really give you a price for them because we've moved so much, it's not going to be an accurate number, but we're going to look at AAP. By the way, 4 of the 5 candidates from yesterday, with the exception of Home Depot, did exactly what we wanted them to do. All of them worked out great, so hopefully you took advantage of some of those. Home Depot is back on our list again today. They got downgraded by Raymond James today. So they're down $3.18 right now to 308 3/4. They, of course, do have weekly options available on them. So they're sitting down at 308 right now. Come here and click on it, activate it. All right. So if we're down at 308, that means we're sitting just below that 309. We're still in a bullish bias. It really hasn't driven it bearish on the news yesterday. A little bit of a topping pattern the last couple of days, but nothing here that says, we're headed down. At least not yet. I'm not saying that this goes up forever, but at least not yet. I'm not seeing it. So if you wanted to do a short term, the only way I would do this would be a bear call spread above 315. And I would do it as aggressive. I'm not excited about it. It's a bearish trade in a bullish pattern. Now, Lowe's came out with earnings as well. Home Depot was yesterday. And Lowe's is the only one on my list right now that is green. They're up $5. They just had the CEO on CNBC talking as well. So they're at $214 right now. So we're taking the train up. We're above that 212.5. Little tight to get in there. But here's what we're going to do. We're going to look at a bull put spread. BPS, bull put spread below 212 aggressive, or a bull put spread below 206, which takes us a little further down, gives us a little bit more. Hold on, Rob. Nope, wrong numbers. I don't know why. I'm thinking we're up. We're at 214. My bad. We're up 214. So yes, 212 and then 206. Right? If you do the 212s, aggressive just means less contracts. Just caution, because it's very tight. Qualcomm, right? They were picked by Credit Suisse as the top semiconductor pick out there, right? Big designation for them, and they're down 2 cents. So apparently it didn't matter as much. They were up on the TSM news yesterday, which was a great trade for us yesterday, right? Okay, what'd I do? I don't know. So really good news for them. We could look at a bull put spread below 123, but keep in mind the news hasn't moved it. So this is not a news trade any longer if you're taking it. So I'm going to write caution next to this one. It's really not moving. RCL. Good overall push to the upside. RCL is down on Carnival Cruise Line, CCL's earnings. CCL is just, it's a $9 stock or something, not really interested in it, right, to the downside. If we had upside pressure, yes, I could sell puts and such, but downside, I'm not really interested in it. You can look at it, check it out, as another candidate. But they're down based on the industry being down. And the funny thing was, 2 days ago, CNBC said, oh, the cruise lines are doing great. And then there they are down. So RCL is down today $1.50 to 59.20. So we're still above this fib line right here. I'm going to say next. Yes, they're down, but not down enough to do anything. All right, Target, they had earnings come out today. Let's see. Earnings 2 quarters ago, I was just having this conversation with my wife. They came smashing down on having too much inventory, but we're going to fix it within a quarter. And they did. Their next earnings came in, and they were down $3 or $4 or something like that. It wasn't bad. They took a hit on it, but it wasn't bad. And then today they came out and said, we have too much inventory. We've miscalculated shoppers. And what they're seeing is, and not surprising with how high CPI is, Consumer Price Index, shoppers are not walking into a Target or any store and saying, oh, I want to just buy a TV. No, they're walking in for sales. And they were saying that without a sale, they're not walking in the door, right, to pick things like that up. The staples and things like that, yeah, maybe. So they're working on their inventory again. They are down now, whopping $24 again. Takes them down to 155. They were at 255 6 months ago, guys, right? So it takes them down to 155. So again, it wasn't a train there. This was a friggin' drop, right? Through the 171, through the 158. We're going to look at a bear call spread above 159, right? Which we'd have to go to 160s. And again, I can't give you numbers on them because they were so much different than they are today. You know, the 160s were $20. We're $24 away from where we were. So 60, that's 84. The 184s, if we look, which of course we don't have 84s, it would be 185. So right now we're saying above the 160. All right, let me just find that, get it on the screen. Okay. And then 185s. That's 25 points. They were trading at $5 yesterday with the 87 halves trading at 4. So I don't have a good number for it, but it looks like this $2.50 spread as of yesterday would have been worth $1. That means, we're not trading this one, that means if we can extrapolate it back to the 160s, that's about what that would bring in, it is $1. Okay? And it doesn't work penny for penny that way. This is just an opportunity to look at it and say, do I see anything there before the market opens? All right, there you have it, everyone. Have a great rest of your day, and I will see all of you at our next update. Be safe trading. Bye for now.